One of the world's top trading routes, the Suez Canal, is essentially closed for business to many shipping companies. That's because Houthi militia in Yemen have been attacking ships in response to Israel's war in Gaza. John Yang takes a look at the implications for international commerce.
Amna, normally about 12% of global trade passes through the Red Sea and the Suez Canal. But now the world's biggest shipping companies are detouring thousands of miles and going around the Cape of Good Hope at Africa's southern tip. That's adding fuel costs and time. It's also a major route for oil and gas shipments, so prices edged up this week after BP and some tanker groups said they were suspending use of that route. Ryan Peterson is the founder and CEO of Flexport, a supply chain management company. So Ryan, from your point of view, what's the biggest effect of this, of essentially shutting down this shipping route?
Thanks for having me on. It is a much longer way around the Cape of Good Hope. It adds about 20% to the journey for a container. And 30% of all container traffic flows through the Suez until this week. So that's a huge diversion, a huge extra time spent. Now, it's not so much that it's the time alone that matters, but what that represents is a 20% decrease in the supply of ships, right? Because to serve the same service frequency, you need more ships. So that's a 20% decrease in supply of shipping capacity. And well, the laws of supply and demand tell you that means the price is going to go way up for shipping ocean freight, which, it's a huge percentage of everything that you buy. This is especially for the European markets trading with Asia, but it's going to have an impact on the US East Coast too. A lot of trade coming from Asia to the East Coast goes through the Suez, out Gibraltar, and over to the East Coast across the Atlantic.
Now, supply chains have been going through a lot in the past few years with the pandemic and recovering from that. How big a deal is this to the supply chain, and how resilient are they, do you think?
It's a pretty big deal. The reality is, we feel like we have really resilient systems. It's almost miraculous infrastructure that supports the global economy. But then one little thing like this right at the choke point, and that's all it took, was a small group of rebels shooting. Well, they do have some pretty impressive missiles and drones and things, but it doesn't take a huge, well-funded war to disrupt this. And we've been through a lot in the supply chain industry. It's one of those like, oh, here we go again type moments.
What is the potential impact on the global economy?
I think the thing to watch here is that for the last 6-12 months, you've really been in a deflationary environment, meaning prices have been coming down from the peaks that we saw during pandemic and all the supply chain shortages that were happening. People have assumed that inflation was on the way out, that we beat it. And ocean freight is, if you listen to retailer earnings calls, they've often been saying, hey, the ocean freight's cheap, there's excess capacity, we expect it to be cheap, it won't be the impact that we had on our profits, we're going to be able to keep prices low to consumers. All of a sudden, we have to completely rethink that and say, we've already seen in January, the prices for ocean freight for this coming month, for January, have already started to come out. And it looks like Asia to Europe trade lanes are up about 3x versus just a couple of months ago.
So the impact is already being felt. This has not only been going on for a few weeks now. Any sense of how long it is before it really bites, before it really becomes a big problem?
Well, I think it's just sort of wait and see what happens. It's not easy to see how the U.S. Navy instantly solves this problem. Saudi was in an active war with Yemen for it seems like a better part of a decade and wasn't able to stop this. It is an extension of the Israeli conflict in Gaza, as they explicitly stated by the Houthi rebels, really it's almost a government in Yemen. It is explicitly stated as connected to that. So it's not easy to see that there's this simple overnight solution. Sending a carrier group there doesn't solve it immediately with force.
Talk about sending a carrier group, but the United States is actually leading a multinational force that's going to patrol the Red Sea, trying to protect merchant ships. Is that going to give the shipping companies enough confidence to try this route again?
I think it's very difficult to say. The decision making from the shipping companies is first and foremost going to be about crew member safety. It is dangerous, and if there was a group firing missiles at my office building or your office building, I'm sure you'd make the same decision as let's stay far away from there. There's insurance premium. So when it comes to making a business decision, if in a war zone, if you sail into a war zone with a ship, your insurance is probably void in most policies, or it's a very expensive premium. And frankly, this is not an easy solution, whether it's U.S. Navy or a large scale coalition. Saudi Arabia has been at war there's a ceasefire, but they'd almost a decade of war with Yemen and weren't able to stop it. Yemen, the Houthis have explicitly said this is tied to the conflict in Gaza between Israel and the Palestinians. And so it's not that there's an easy overnight solution. And even if there was, doesn't seem like it's just through force and from the carrier groups. So not easy to see how this resolves very quickly. But at the same time, the Suez Canal is incredibly valuable for the world economy. So it's also hard to imagine that the world coming together wouldn't take enough action to fix it.
Ryan Peterson, CEO and founder of Flexport. Thanks very much.
My pleasure.